Good afternoon from Los Angeles. It's Alyssa Quorum and Ed Carson here. We have a look at the stock market today. And on today's show, we're going to be talking about O'Reilly Automotive as well as Wynn Resorts and Apple. But first, we want to take a look at the major indexes. So we did finish the day mixed. The S&P actually finished flat. The Dow down about 0.3%. The Nasdaq finished up about 0.25%. And notable there, the tech-heavy index intraday hitting its highest level in 2019.
Yeah, it follows on what the S&P and Dow did yesterday. So that's nice. It was sort of a quiet session. The Dow largely fell because of Walgreens, had bad earnings guidance, so that stock, double-digit loss. Really, that one's been slumping for quite a while. But the Nasdaq, it was one of these quiet days. It seemed like it was going to be completely meaningless, but hitting that new high, it's a nice sign there. And some of the growth stocks picked up a little bit toward the end of the day. Some positive action.
That's right. Well, nice action for the Nasdaq and some compelling action among stocks that we've been highlighting, O'Reilly Automotive being one, following up on our conversation of that name last week. Did stage a breakout today, although it closed just below the buy point here, closing about 10 or 20 cents below a 394.52 buy point. But even when it was crossing that level intraday, the volume wasn't really there. So that's something that you really want to look at when you see a stock breaking out.
You want to see volume at least 40 to 50% above normal, because that's a sign that mutual funds and big institutions are really stepping in, because they're the ones who really drive a stock higher, significantly higher. Now that it's been doing well, it's had it actually had risen 81% or so from its April 2018 low. People go like auto parts retailers boring, but it's really been a top group. It's been a top stock. A lot of other auto parts retailers are doing well as well.
That's right. The numbers don't lie. So when you're analyzing stocks, stripping away some of those preconceived notions about sector or industry group, it's a good thing to do when you really want to be focused on performance.
Absolutely.
All right, and next up, let's take a look at Wynn. A big gain for Wynn today as it broke out of a bottoming base, gaining over 4% in heavy volume here. So it's the second straight day of heavy gains, retaking the downward sloping 200-day line here. But even though it is breaking out, what are some of the things that investors should be cautious about? Well,
first, another positive sign is that this comes after Macau had some strong gaming numbers and some positive Chinese economic data, which just suggests, well, maybe you're going to see more gamblers come down to that enclave. Las Vegas Sands and Melco, which are two other Macau gaming stocks, they broke out past consolidations yesterday. But all of these stocks, they have pretty crummy fundamentals. Their earnings estimates aren't that good. Maybe it'll turn around, but they're all generally weak or declining earnings this year. Maybe a little of improvement in 2020, but you should still pay attention to when groups and sectors turn up. Just like, well, maybe there's something here, maybe there's some kind of improvement. Obviously, some really strong action, but you can also see, this is a base within a larger consolidation. There's a long way to go to get above just to a 52-week high, let alone an all-time highs.
That's right. It's about 33% below its 52-week high, so quite a way to power higher there. Although it's well off of its lows, so it's starting to move higher. We'll have to see if it can continue that and hold above those moving averages.
Absolutely.
And we want to take a look at Apple forming its first base in a long time. Speaking of stocks that have gotten pretty beaten down, Apple was one of those, but it is now forming a cup with handle base. We have a potential buy point at 197.79 here. So technically the handle is in the upper half of the base here, but it's still well below its highs from last year, about 17% below highs.
Yeah, it's ideally you get a handle much closer to the high of the base, because you want that handle to sort of be that last resistance point where the people who bought near the old highs are saying like, oh, I'm getting out because it's falling, I better get out. And so when it breaks out, it's really going out. Here you sort of figure there's overhead resistance limits. So technically this could work. You could easily see this forming other patterns or other things. There's just a lot of overhead resistance. It's obviously been acting better. That's good for the market. There's still concerns about profits.
Right.
The iPhones are not selling particularly well, especially in China.
Well, it's about 2% below a potential handle entry after retaking the 200-day line. So we'll be keeping an eye on Apple. But again, it's still well below highs. So we'll have to see if it can muster up a successful breakout with it falling down so hard, almost 40%. That's another thing to keep an eye on because those really deep bases have a higher chance of failing.
Yeah, you never know. We've seen a lot of those stocks where they try to break out and then they fail. Who knows? Maybe Apple will be one of those and then sets up another base. I mean, there's all sorts of potential things.
There are. Yeah, and along with that decline, it did reset the base count. So I guess that's the cup with handle half full there. All right, everyone. Thank you for joining us today. And be sure you're heading to investors.com for all the latest stock news and analysis. You can get more details on O'Reilly Automotive, our stock of the day. We have a story as well as an accompanying video there with more details for you on the chart action. And make sure you're following us across social media, whether it's on Facebook, Instagram, YouTube, or Twitter. Lots of great content there for you. And our podcast. I can't believe we're already having our 4th episode. We're recording it this afternoon, and it usually goes live every Thursday, but this week it will be a day early. So make sure you are keeping an eye out and watching on your platform of choice, whether it's Apple Podcasts or Spotify. Make sure you check that out for more details. And our host is Arusha Pires of MarketSmith, and you can follow him on Twitter at IBD_Arusha. Thanks for watching, everyone. We'll see you right back here tomorrow.